Hey guys, welcome to another video on the fundamentals of the stock market. Today we're going to talk about one of the last indicators in this series, which is called the average true range. It is an indicator that almost every professional traders uses out there, or at least they know about, right? So this emphasizes again on why you should also know and pay attention to this lecture. It is not an indicator that will tell you where the price will go, but it will predict how far it will go. So without further ado, let's get into it. So in trading, right, besides knowing when to enter the trades, you also have to prepare the exit. And what exit means is that when you buy the stocks, you have to prepare on when you want to take profit. So you can use average true range, ATR, that tells you how much the stock moves in dollar value, so you can prepare for this exit. So as we can see on this slide over here, right, this is the candlestick chart, and down below is the average true range. The average true range again is in dollar value, so when we see the 18 and the 14 over here, that means the stocks could move to $18 for this day, and then when it ranges down, it means that it most likely will not trade more than $10 during these days. As you can see, when there is an increase in volatility, when there's a huge candlesticks, then the average true range increases. Of course, when there's also gaps, this also increases the volatility because the price difference is significant between the previous day and the current day. It increases this volatility and hence it increases the ATR. So what does this really mean, right? What happens when it's around $10 versus when it's higher, right? When it is lower, it just means that during these days, most of the time the stock does not change the dollar value above this amount. So let's say if the ATR for today is $10, that means for this stock, most likely it will not increase by $10 from where it started from, or it will not decrease by $10 from where it started from. That's really what it means. So how is average true range being calculated? Because we're talking about average, this means that we're always talking about data within a period of time. And by default, this period is 14, meaning we're calculating the average of the 14 days prior to the current data we're talking about. This formula may seem very complicated, so let's break it down. Let's say we're looking at the candlestick, let's say we're calculating the average true range for August 1st in this case. Then we're looking at the previous 14 days before August 1st, and we look at the price movement in absolute value and then we average it. Meaning that, for example, on July 31st, how much has the price moved in terms of absolute dollar value? Maybe increased by $5 or decreased by $5, whatever it is. We just take the absolute value, 5, and then we do that for the prior 14 days, add them all together, and then we average it. That's how we calculate this ATR, right? The formula over here just shows a version that basically calculates every subsequent value, right? So don't worry about this formula and maybe how it sounds different than what I explained, but it is essentially the same concept. So one important thing to remember is that ATR is calculated in dollar value. When we were talking about over here, the 18 and the 14, these are in absolute dollar value, right? Let's take an example, right? Let's say the company trades at $20 per share with an ATR of 80 cents. If you plan to sell during today and you see the stock is going up by maybe 80 cents already, now it's at 20.8 cents. Are you going to sell? Well, the answer is probably yes, because it is unlikely that the stock actually goes above the ATR. Although it's not impossible, most of the time we see on average the stock goes up by 80 cents or goes down by 80 cents. So the fact that it already went up by 80 cents means that for today at least, it already reached that possible maximum, right? Now let's say another company trades at $100 per share with an ATR of $5, and you see the price going up to $102, and you wanna look for a sell today. Should you sell? Well, in this case, maybe, but maybe not, right? Because the stock still definitely have room to go further up, unlike the prior case. In this case, we're not looking at percentage, we're looking at absolute dollar value, right? So that's why it's important to make sure you have this understanding of what ATR means. Now let's take a look at trading view, and I always like to give an example. So in this case, we're looking at Meta, and we all know that Meta had a huge volatility back in March 2022. So when we're looking at the ATR down below, right? Actually, first let me show you how do you add indicators in TradingView. So all you have to do is click on indicators, and there's a whole bunch of different indicators that TradingView already calculates for you. So let's say if we want to do ATR, we can just type in average true range, or ATR for short, and we can click on that, right? And this will bring up the below panel. And because there are parameters that can be tweaked, we talk about the default period is 14 days. We can actually change this. You can tweak this to 15 days, 7 days, etc., etc. But usually if you don't really know what you're tweaking, it's better to just leave it as default. And 14 days is the norm of what most people use anyways. So when we're looking at the ATR for Meta, we can see that relatively it hovers around $6 back in last year, 2021. And then when it came to this year, it increased to $16. Even though the price wasn't going up, right, it was going down, but the ATR increased. Again, the ATR is in absolute dollar value, so it doesn't care whether the price is going up or going down. It just look at how much the price has changed on average. And because over here Meta has lost maybe like almost a third of its value during a few days, that's why the ATR has increased dramatically. And then it decreased back down when the price started stabilizing around $160 to $180, right? So again, let's see what this really means, right? If we're trading Meta right now, and today Meta is at $162, let's say if it went up by $6, right? Do I want to sell the stock? Most likely yes, if I'm trading on a daily basis, because the ATR shows me that it is unlikely that Meta will go up more than $6 on a daily basis. Let's take a look at another example, right? This is just another random company that I found, but in this case, it has a much smaller ATR than Meta. And in this case, the Meta had an ATR of around $6 to $8, versus this one only had from $1 to $2. So if we're trading this stock and this goes up by $2, do I think I want to hold it because I think it can trade further? Well, no, because ATR tells me that most likely it will not go up more than $1.2. So if it goes up by $2, then yes, most likely I definitely want to sell it if I'm trading on a daily basis. Okay, so to recap, we talked about the last indicator, ATR, and how it shows what is the range, how likely, how far the price of the stock will go on a daily basis. And this is very useful in terms of helping you plan your exit. So I hope this video has helped. Soon we'll talk about other topics such as risk management and investment strategies. I hope you enjoyed the video, and if you do, please remember to like and subscribe because it will help my channel so much. Thank you.